It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. Today, we're focusing on copper and cars. Which is worth adding to your portfolio, which is better left behind? I'm here with Bill Davis. He's Hennessy Stance ESG ETF Portfolio Manager. Thanks for being here. Appreciate it.
Me, Julie.
So let's get to the stock you like first. We're talking about Freeport-McMoRan, copper and gold. I don't actually know if the copper and gold is still part of the name, but I'm used to saying copper and gold is part of the name, and it helps me remember what they do. The stock up a little bit year to date here, so let's talk about why you like it. It is one of the bigger miners out there in the copper business in particular, right?
Yeah, for sure. And in fact, in the US, they might be the number one copper miner. They are, I think they account for about 8% of global copper mining and production. So they're a massive player, and they have been at this for a very long time.
Right, so established player here, reason to like them. Copper, everybody needs copper. So that's one of the reasons, just that there's always sort of an underlying demand here for copper. You like the stock for that?
There's always been an underlying demand, but that demand is going to accelerate. I mean, there's copper in here, there's copper in medical devices, it's in airplanes, it's in EVs. It's indispensable to modern life, and especially as energy transitions to cleaner sources of energy, copper is a big part of all of that. So it's stable, it's in every building, all the infrastructure, so it's not going anywhere. Demand is going to increase in the years ahead, and the supply of it is somewhat static. I mean, it takes a long time to develop a mine, to develop proven reserves. It takes a lot of capital, and so I think it's kind of a very enduring story.
Interesting. And then also there's the idea that there's this wide economic moat. For the reasons you were just describing, there aren't a lot of copper mining startups, for example. It's a hard business to get into.
Yeah, no, it takes billions of dollars to even begin to think about mining copper. To give you an example, one of the challenges in the copper space is that over time, the quality of the copper as you extract it from the mine goes down somewhat. So you have to make up for it by increasing the milling rates and the productivity of the extraction. So that's kind of like all a big part of the story, yet Freeport has proven to be very, very good at that. They understand how to balance capital expenditures, improvements in milling. Their reserves are very proven and vast, and they're also diversified. So they've got a big presence in the US, but in Chile, Peru and Indonesia are where their major operations are.
So we always like to point out risks, potential risks for people's stocks that they like. And in this case, a softening global economy. I mean, I am curious how much Freeport-McMoRan the stock price tracks to the price of copper. And if there is any softening demand, you tend to see the price of copper go down.
Yeah, well, they're definitely price takers, right? So they are absolutely tracking the underlying commodity. However, I think in 2024, they have telegraphed that they're going to do something like $5.8 billion in consolidated operating cash flow from all their business units, which also include gold and some other things. Every 10-cent change in the price of copper is worth $400 million to them. So if copper goes from, I don't know, I think it's like $4.23, goes up to $5.23, that's actually massive. There is, however, soft demand right now, and there's also kind of like high inventory levels, and that's not a great combination. And I think that's why you see some of the fluctuations, but because it's a commodity, it's always going to be somewhat volatile. But I believe that, number one, the pace of technology, the pace of energy transition is actually going to offset any global demand softness. Especially in brand new industries. And EVs are a great example of that. I mean, that wasn't an industry 8 years ago, and by 2030, 2/3 of all cars sold around the world are going to be EVs. So the demand's going to go up. It's going to be volatile, but I think it's an important, well-run, we're an ESG manager within the Hennessy family, and it's unusual to see an ESG manager talking about a mining stock.
Yeah, I was wondering. I have to say, I was wondering about that.
Advocating for it, but this is essential to kind of the world that we want to live in. And ultimately, what we're interested in is finding the best mining companies, the ones that understand that in order to have a license to operate, they need to be cognizant of the communities that they operate in,
Gotcha.
the workforces, indigenous populations, all of that. And Freeport is very good at all of those things.
Okay, so that's the stock you like. It's in the ETF, obviously. Let's talk about another stock that's in a lot of ESG ETFs. It's Tesla, but you guys don't like it as much. Tesla, has had some issues this year, right? Losing market dominance. We have seen its share go down. We have seen EV sales generally also challenged, right?
Yeah, right. The 100%, the combination of high interest rates and expensive cars is not a great recipe for growth. But I think that speaks to kind of the beginning of the foundation crumbling with Tesla, and that is that they, in an effort to become the leader that they were, and I don't take anything away from some of the things that they accomplished, they also basically ceded the market to the low-cost entrants. And sort of the next evolution of growth in the EV space is not going to be people buying $100,000 sedans. It's going to be $25,000, $30,000 cars, or in other parts of the world, $10,000 EVs. And I think that they are late to that game. And as a result, they're not only losing market share, but they're also, their performance is really kind of ho-hum.
Right, and they're discounting now to try to move product, and so that's been having an effect on margins.
That's right. So their margins are going down, their profitability is way down. They have, obviously the Cybertruck was going to be a big thing. I think the Cybertruck has not been a big thing, and it's been plagued by, recalls, one right after the other. Now their next big thing is going to be
Robotaxi.
Yeah, the robotaxis, and we're going to see how that works out.
Yes, we will. And then the last thing we want to point out is Elon Musk himself. And it's very interesting talking to people, investors, about Elon Musk, because some just love him and everything he does. Some say, well, he's colorful, but it's a solid company. And then there's some who maybe are in your camp who say they don't have the patience for his antics, his sort of off-CEO antics.
Yeah, I think antics is a good word, Julie. I mean, Elon Musk is Elon Musk, like him or hate him. But the reality is he's a part-time CEO running this company, and I think he is alienated the one base that's actually super important to him. So a lot of people aren't going to go buy a new Tesla when they can go buy a used one. And this is very anecdotal. And by the way, I drive a Tesla, and I'm on my second one. But for myself and pretty much everybody I know, we're sort of, counting the days until we can swap it out and get something else other than a Tesla. So, and I think a lot of that is just, as good as he's been for the technology, I think he's equally bad on the brand side of things. And I think that's super important.
Let's get to the counter argument, though, quickly here, which is if they do come out with that other car that is more affordable, as you said, that's what the market wants.
Well, okay, so they're now saying at the end of 2025,
right,
which means probably sometime in 2026. So it's not going to happen anytime soon. I also worry that with the driverless stuff, the taxis that they're rolling out, any real bad news there, and I think bad news gets amplified in things like taxis where people, expect to leave a place and arrive at a place 15 minutes later or 5 minutes later in one piece. But I think that any kinds of problems that they have with that rollout, I think could be really harmful to the brand moving forward. So I do think if the rollout occurs on time, if there is massive interest and demand for low-end, price point vehicles, right, I think that this could, in effect, become a buy again. But I think until then, it's kind of dead in the water. Okay.
Well, we'll keep in touch when all that stuff happens. Bill, thanks so much for coming in. Really appreciate it. And thank you so much for watching Goodbye or Goodbye. We'll bring you new episodes 3 times a week at 3:30 p.m. Eastern.